Hello and welcome to the Capital Spreads Weekly Update. Today is Thursday the 15th of July 2010 and we've had a relatively positive week so far, and it would seem that the optimism that sort of commenced after the Independence Day bank holiday in the US last week has followed through very much to this week as well. We're some 2% higher now in the FTSE 100 and just finding it a little bit difficult around some resistance levels that the markets had struggled at exactly a month ago. But generally on the whole, sentiment just seems to have improved somewhat, and that is in the face of some relatively negative news flow so far this week. We saw on Monday at the beginning of the week UK GDP numbers coming in line, nothing really particularly special about those numbers, but also the Federal Reserve in the US, the minutes of their last meeting revealed that they had revised their forecast for US growth downwards. So we had quite a volatile session in the US yesterday with markets selling off, but have rebounded somewhat, and that again is in the face of worse than expected GDP numbers from China. The market's very much focusing on China, looking to lead the global economy, continue growth for the globe as a whole, but the GDP numbers in China were a little bit worse than the market had expected, and so miners have just found it's a little bit difficult to continue their recent strength. So the current situation is that we're better than we were last week. The major indices, certainly the FTSE 100 was below the psychological 5,000 level. We're now above that, around 5,250. The Dow, of course, below its psychological level of 10,000. We're well above that now, 10,390. And this renewed appetite for risk has been to the detriment of the dollar. So the likes of cable have improved quite a bit, and also the euro, when it was completely written off say a month ago or so, it has recovered quite dramatically, and so cable's around 153.50. The euro dollar is around 128.30, and bulls will be hoping to test the 1.3 level in euro dollar quite soon. And it's gold really that has probably just trended sideways more than anything else. It's still above the 1200 level, around 1213 at the time of filming. So how are clients playing this? Well, they usually go against the trend of various indices, but in fact they're still long the FTSE, expecting the market to strengthen and possibly test resistance just above these levels and maybe even push on through. But and they're also long the Dow, so expecting further strength in London, further strength from New York, but actually they're short the German DAX, so interesting how they're negative of the German index. They're still long gold and oil, but on the currencies, very much against the trend, still expecting the dollar to strengthen and the euro to decline, so very much short euro dollar. What do we have for the rest of the week? Well, the rest of the week, little in the way of economic data, but tomorrow the focus will be University of Michigan confidence numbers in the US. They're expected to decline just 1 point from 76 to around 75, being propped up by a little bit of an improvement in sentiment, and also it wouldn't come as a surprise if that number was a little bit better than the market expects, considering we've had quite a good rally in stocks over the last couple of weeks. So the theme of this week is very similar to last week. With the theme last week was, have we reached the bottom? It would certainly seem that we have reached the bottom of this recent downward move in equity markets. So can we expect a summer rally? So the market's obviously just testing resistance right now. There are still a couple of very key indicators that are saying that equities should weaken. But the markets have done well in the face of these negative indicators, and on the low volumes, which obviously is not a great sign of strengthening stocks, we are higher and we are testing resistance. So it is conceivable that we could see a summer rally over the next few months, and even test possibly the highs of the year before the end of the year. So that's it for this week. As ever, do give us feedback, media@capitalspreads.com.